Hi, everybody who's ready to have a good week. Good morning. You could hear me breathing? Okay. Yeah, I wasn't muted. Okay, Zig. All right. So I wanted to start off talking about USD CAD. Oh, please, I'm going to bounce you from the room. We had a chance to break out of this wedge here last night. The interesting thing to me about Canada this morning is in a strong dollar environment, dollar's popping pretty good. USD CAD does not seem to have the same type of rocket fuel here. So there were two ways to look at it. It could have been this kind of wedge setting up here, but you could also just draw a straight line. There's a weekly. 38.5 was a big level back here. 38.5, we have two hits. And if you just put in a straight line, horizontal line, then what you have developing is a descending triangle, and a breakdown under 138.5 is going to take it down into the low 130s. So it could be because of oil. I'm just saying that all the way up when the dollar was strong and there was risk off, USD CAD would perform much better. It's not doing much today. So I ask myself, if this crude bounce terminates and corrects a recent advance and S&Ps don't go straight to hell and risk on comes back, what's going to happen to Canada if it can't perform under the best of conditions? So be careful about your longs, definitely under 138.5. You want to be short, in my opinion. I'm still constructive euro, even though we're getting this pullback in euro today. The 109 level is pretty important. I have confluence of moving averages coming in just a shade under, between 880 and 860. In situations like this, like I put on a piece at 33, and I'll be looking at it if we start trading down here in the next couple days down towards 109, because I also believe in the dollar. If you take a little bigger look at it, was bearish a dollar last week against last Friday, the previous Friday's high, and here we are at some very important support here. Didn't quite get there, but this too looks like we could be getting a descending triangle. So I'm going to be fading dollar strength this week. Maybe we get up to 100. You could have a descending triangle, even, go for a stop hunt above 101, but I don't expect that. Expect right around the 100 level to provide some decent resistance. And then should we break down, just like Canada, on a breakdown under support, breakdown under this support level is going to take you back down towards these lows. 95 level. This is interesting. Gold fought its way all the way back after being down sharply Friday. I'm looking to short the market, and one of the reasons I'm looking to short the market is this. I always want to look at what's the strongest instrument related to gold, and Newmont Mining is actually even stronger than GDX. Here's Newmont. And Newmont on the 4-hour, you could tell, has a 1, has a 2, and I'm looking for a 3 up here in Newmont. You could tell it's even stronger than GDX. It broke out first. Here's GDX. Kind of has the same type of look. So I'm thinking that we could get some type of peak in here, maybe around the full moon on Thursday sometime this week. But I'm gonna this is what I do. Like, I don't have an area in mind to short gold, right? When I look at the gold chart, nothing's that clear to me of, yeah, this is a good level to do it. Is it 720? Is it 730? Or do we need a new high over 1740? So what I'm going to do is I'm just going to use another instrument that I have a clearer picture on, which is Newmont. And once we start making a third drive up here to new highs, looks like that would be about, probably about $3 higher or so. And it starts coming off, then I'll just go to gold and short gold wherever it is when this completes this formation. You guys understand that sometimes you may not have a great idea as to where to short something, but another instrument that you have a better feel on it. No audio? Brock, everyone else has it. They even heard my breathing. So you could just wait for something that you do have an idea of what could happen here. So I'm going to be waiting for Newmont, to make a third drive up here, and then look at where gold is and go for it. S&Ps last week, and I think we were on with Investors Business Daily. It was during the summit, and I was fortunate. I know Steve's still short. I think that we have at least moved to 2640. Okay, so this is where I think we could go. I look at it right now. I know some people still think we could get another high out of this market. I'd be looking at, moving averages, maybe 61.8 if we got that, 28.60, different fib levels. I'd look for a failing rally in S&Ps. Here's a level. This 2860 to 2900 looks like a decent area to try and sell a rip there. And I know that Blake, when we were having the webinar on Friday, was actually, I think, shorting Euro and was looking for a pullback. So Blake, how are you? That was a good call. Wondering, don't send me to detention. I didn't watch the week ahead video. What? So I'm probably going to get you to repeat what you probably said on the video.
Sake. Huh? Well, for Christ's sake, what are you doing?
Yeah. I was busy bouncing off the walls and I couldn't concentrate. So, I tell you what, it's a comfortable prison, but it's
yeah.
What I mean? I'm in the most comfortable prison any prisoner could ask for.
Yeah, so. It's interesting. One of the things I was just talking to one of my colleagues and he's in Stamford, actually, Connecticut.
Yeah.
And because we're all trading from home, so it's even though the office is in Greenwich, the guys haven't been in the office for a couple months now, and they're all trading from home as well. But we were talking about something that I discussed on the week ahead video that you didn't obviously listen to. So
I had to confess because I knew I'd be
no, it's good. But we were just talking about the fact that I was just reading some about the cell phone data over the weekend. It's like, whether you like it or not, people are moving around. People are actually starting to get out, and they're done with it. I mean, I think I've mentioned this like over the last week or two. I've talked to a lot of my friends, especially, I'm in a different place than New York. So let me just say that Arizona, where I live, where it's extremely sunny and, we have a lot of space in between us. People are a little fed up. And you can hear it in the frustration in their voices, and like they're ready to get out. I mean, and I'll say that a couple of different things. If you look at the cell phone data, it tells you that people are moving around. People are not staying at home. They're done with it. They're fed up. And Nate Silver, it also referenced something on his data as well. And we were talking about that today. And the fact of the matter is we're going to see the repercussions, if there are any. We're going to see it in about a month from now, right? I mean, you know, for
more
the
infections,
good,
you mean?
whether it's good or bad, you know, we're going to be seeing it. And I think people are at that point. And I was talking to, you know, some of our neighbors, and if you don't know, on Saturday nights, a bunch of us neighbors, we actually get together on, you know, in our driveway and have, you know, a couple glasses of wine, and we all sit, you know, 6 feet apart, and, you know, we social distance in the driveway. And but we're hearing this is a very, you know, this is a very common phenomenon. You know, I'm sure not just where I'm at, but where everybody's at. And I do think that some places are built differently than others, just because, you know, the from a you know, spacing standpoint, like where I'm at. I mean, it's hard to get super close to somebody, you know. And but if you're in Chicago or you're in New York, you know, that it's different when you have a bunch of people out and about. I mean, you're you know, London, you're like wedged up against people, you know. Just when you're in a city center. So it's a different way of life, and I think that a lot of people are going back to their normal way of life. And like I said, we'll see what those ramifications are. But, you know, in regards to the euro, let me tell you what I was doing and what I'm doing. I've actually lightened up a little bit on my euro short, because if you weren't aware, I was shorting the euro above 110, and it was the, you know, underside of this trend line. 618 retracement, failed breakout right here. You can see the blue line here, right? Failed breakout. We've pulled back a little bit. I think that any rally now in the euro dollar, you got to use as an opportunity to sell. So I'm hoping, because it's been such a slow night overnight in North American trade, or in, European trade, I'm hoping we get some sort of move that looks like this, and we can have a little head and shoulder pattern and take us back down towards, you know, 108. Because I do think we're in a 108 to 110 range, personally. Now, there's the more significant charts to me at this moment are the equity markets, and I am repeating a lot of what I said, I think, over the week ahead videos. I'm trying to think what I was saying yesterday morning. I can't always remember what I was talking about. So you guys have to also understand, I get up on Sunday mornings. And I did have a couple glasses of wine the night before, but I slept well, and, you know, I got up, but I needed to film the video as soon as I can, so I can get it out to everybody early enough before the open. So the one thing that is really most important to me is that we had false breakouts in the S&P and in a lot of these markets. So if you look on like a weekly basis, let me see if I can pull up a better chart here. It's SPX. I'll pull up a chart I haven't drawn so much on. So if you look at the weekly candle of the S&P, probably the most important thing here is the false breakout and the 618 failure. So here's the 618 gap fill, right? Pretty much. False breakout. False breakout. So what does that mean? Well, that means to me, any rally that you see in the S&P, you got to sell into, right? So any type of strength that we get in risk, you want to sell into strength. That's my initial thought process, and it's not only just the S&P, it's across the board. Okay, so basically that's what I'm thinking going into today. I'm hoping that we get a little bit of buying in some of these indexes, and give us an opportunity for some dollar weakness. So what I'm hoping for here in the euro is that the euro pops, maybe back up to 106, or 109.60 and 109.70. The Aussie dollar, which is surprisingly, it's actually strong right now. I'm hoping the Aussie will, make its way to 64.50, and give us an opportunity to be on the short side of that. Now, don't forget that tonight we have, well, tomorrow morning, but tonight, if you're here in North America or even in Europe, we have the RBA rate decision, right? I'm not expecting the RBA to move on rates, but I am expecting them to stay, relatively dovish. So, with that being said, I think that I think the risk is that that the Aussie might rally into the RBA decision, but then you got to use that as an opportunity to be a seller. So if you look at the Aussie dollar in particular, remember the Aussie is very similar to the S&P. We had a false breakout, right? So the Aussie may be a rally to the 38% retracement here would be 64.50 basically, and 64.70 would be the 50% retracement, which is possible. We make our way up there. I think it's entirely possible. So that's what I'm hoping for today, is just a little bit of a pullback. It has been a very, very slow North American session, or excuse me, European session thus far. It's been actually a pretty slow open. And I'll stop for a moment and I'll talk to you what I was talking to our guys and gals in our chat room a little bit earlier. This is the day, or these are the days where you want to be very careful not to get involved in the market just because you want to be involved. These are the days where you can get yourself into trouble, where you haven't had a whole lot of movement in the markets overnight, and the natural inclination of a trader is, well, I'm going to find something to do. Like, if you're just looking at my analysis in the euro dollar, you're like, well, Blake is thinking that the euro might pop over to 109.60 or 109.70. Why don't I just get long right now in anticipation of it moving up here, so I can get long right now and then look to sell it and turn around and get short over here. And it's the situations like that where what happens is it ends up doing something like this, and it never even makes it back. So you get long. Next thing you know, it breaks through trend lows, and then you get out, and you take a loss, and then you're like, oh shoot, I'm just going to go short because now it's going lower, and then it does one of these and rips up on you. And then not only did you lose money on the long side, but then you got short down here, and then it turns around and you lost money there. And it finally makes it up to where I thought it was going to go to, where you could have just waited originally to get short. And then I sit here up here and I get short the euro right at these levels because I was talking about it, and that's what I'm waiting for. And then you end up getting short and making money up here. But what did you do in the meantime? This is the difference between what can happen to you and what could happen to me, or anybody for that matter. You make money up here on the short side because we talked about it already, but you also lost money here trying to be long. Then you turn around and got excited about being short, and then you lost money there. So you lost money here, you lost money there, and you finally make money here, and you're like, whew, thank God I made money there. What happened? Net, you're probably down a little bit. And where I was just waiting to be patient, and I got short up here and made money. So do you see the difference between, there's one trader, whether it's me or anybody else, there's one trader that actually made money, and then you got turned around a couple of different times, and you're actually down, and you're wondering why is that person successful and I'm not? The difference there is because you wait for your setups versus getting, antsy and trying to trade the market and make something happen that isn't happening. Does that make sense to you guys? I'm giving you a little coaching right now because it's a slow market. But do you see the difference about what can happen to you? Does that make sense?
Yeah. It's not the trade.
No, it's the setup.
Kind
Is
of
you're
like,
waiting.
you want to sell something somewhere and you go, well, why don't I get long until it gets there? And that's not the trade.
It's not the trade. Yeah, that's right. And
Yeah.
I mean, I can't tell you how many people do that. And that really could be the determining factor between you making money and you not making money, is
I
just
used
being
to do that,
patient.
Blake. I go, well, if I think it's going to go there, why not capitalize on that move too? But it
Yeah,
took me a long
yeah,
time to realize it's not the trade. Yeah.
right.
Yeah.
And like, I guess one of the things that and believe me, I'm guilty of it too. So don't think, I don't ever want people to think that I'm perfect, because I am not. I get suckered into trades all the time. I'm like, I get bored. I'll sit here with my thumb in my butt going, wow, I just really want to start doing something right now. And then I'll get suckered into a trade that I wasn't even thinking of. And then I end up getting turned around and losing money and go, damn it, if I would have just sat back and just waited for that one setup, I would have done well. And instead, I got turned around, dicking around, trying to, force something into happening that just wasn't happening. And that's why today, days like right now, days like this, it's very important to stay diligent and disciplined and wait for that setup, because nothing's happening, you know. And it's frustrating for me, as we're with ForexAnalytix. It's like I want to send you guys out a bunch of charts and things that are developing, but nothing's really happening right now. But things will, and the market will, uh, get some life, and we will see, we'll see some moves come up, I'm sure. But right now, it's not. So anyway, I hope that little lesson, if you will, helped. And I'm looking for some things to develop. Like, here's a good example. We on the week ahead video talked about the U.S. dollar Canadian coming up and hitting trendline resistance and reversing. If you use ForexAnalytix, you got the chart about an hour or two ago that we should be heading lower here. Now, what I'm looking for in the dollar Canadians, I'm actually looking for an eventual breakout. So what I'll be waiting for here is actually a move, back down towards 139.60, maybe 139.50, and I actually want to be on the long side. I believe that we are, and I may be wrong, but this is where I'm going to take my pop shot, is somewhere down here. Is I think that we're developing a double bottom. We're going to trade out of this dollar Canadian wedge. We're going to trade higher out of the wedge with a little bit of risk aversion, and probably going into the end of the week with Canadian and US. Sorry, I didn't mean not to yawn on you guys. With the jobs reports that are happening on Friday, I actually want to be positioned on the long side of the dollar Canadian going into Friday, but I'm not buying it here. I'm going to buy it, down below 140 is what I'm hoping. Now, what I hope to happen and what happens, we'll see. I always hope things are going to happen. That doesn't mean they're necessarily going to happen. I'm not a fortune teller. So anyway, so that's just kind of what I'm looking at with the FX market. It is kind of a slow day, but like I said, today is a very, very important, for days like today, that you wait for that setup. You wait for that, the market to give you those opportunities. And that's kind of what I'm doing right now. And I'm hoping that the S&P can build a little upside momentum here and, get us back towards this resistance zone that I've been talking about, for a while here. I'm just hoping we can get back towards this resistance zone to sell into some risk, if you will. What else did I wanted to mention? There was something else that was on my mind that I kind of wanted to rant about today, but I'm not. It's not so much a rant. I just wanted to reiterate, because I said it during the week ahead video. I'm going to say it right now. Thank you guys for all your support with the Traders Summit. I think it was a really, really successful event for a couple of different reasons. For one reason is we had a lot of great speakers and a lot of great knowledge that was given out. And what's cool is we were able to pull that off without charging, so you guys got to listen in and be involved, and we did it free of charge. So that was a huge feat, and I think it was pulled off in a very professional manner. Coach, you did a great job, wrangling in some of these people. You and Joe did, and then being a host out there, you really were just engaged the whole time. You did such a great job. I know Steve did a great job from a logistics standpoint, and our whole team really pulled together to pull this off. So
I learned a lot, Blake, from our speakers, Mark Yusko and Mark Chandler, and really. It really is going to be worth watching again, even if people were there live, because there were so many great narratives painted by these analysts that, it's great. It was 2 great days of intelligence gathering, in my humble opinion.
It really was. And I listened to a majority of it. There's a couple of interviews that I did not get to see because I was working on my presentation on day one. But I'll go back and listen to the recordings myself. So anyway, just a great job. And
speaking of that, Blake, the recordings are actually ready. They will be online within 2-3 hours from now, so people will be able to see them.
Oh, great! And maybe you can explain the process on how that's going to work to our listeners. But I want to say, Steve, great job. You really
Steve,
good job.
You're an animal, man.
Yeah, you are a granimal. Animal. Anyway, but I'm going to pass it over to you guys. Stelio, Steve, I hope you guys had a good weekend. How was your weekend?
Good morning. Very good. Very good. Plenty of sunshine here,
good.
Man. Plenty of sunshine.
Yeah,
Steve is training Jason for the Indy 500. I saw.
Finally, the Volgi family is going to have one good driver. Finally.
So you guys don't know the inside. No one else knows what you guys are talking about. But Steve's son has a little car that he's been driving around. We saw him driving around a parking lot.
Yeah, they floored the whole time.
Actually, my secret plan is to buy him a go-kart in a year from now. His mother is terrified of the idea, but I'm going to do it anyhow.
Nice.
Awesome. All right, guys. Well, I'm going to pass it over to you. Thank you, everybody, for all of your support last week through the Traders Fest, and thank you guys for being here today. And Steve's going to take you through a lot of these charts with Stelios and Dale. So have a great one.
Good hunting, Blake.
Thanks,
Thank you,
guys.
Thank you, Blake.
Good
morning, guys. Good morning.
Good morning, Stella.
Guys.
Hey.
Good morning, Coach. Good morning, everybody.
It's been a quiet morning so far, and I think I've said this in the chat room this morning. I think stocks are going to be, or equity indices are going to be calling the shots. I think from here for the next few days, we are at levels where, for example, the S&P, that's what I usually look at. We're either going to head towards new highs or we're going way lower. And I think the latter is going to happen. But obviously, I wouldn't rule out a move again towards 29.50. But people were asking in the chat room, what do you think about currencies? What do you think about this and that? I think currencies at the moment are correlated with stocks. So it's all going to be about the dollar. If stocks fall again, the dollar is going to strengthen. It's always the safe haven flow. Commodity currency is going to weaken. The pound also weakens as stocks fall. That's what we've seen in the last few weeks. But this is all shorter moves, and see what happens. So I'm looking at stocks more than anything else. And the interesting thing is there's a lot of people saying, oh, I think the recovery is going to be good, and V-shaped recovery, all that. And you take a step back, you look at the situation, you look at how potentially the global economies are going to come back online. I think it's going to be slow. And I was reading today about Trump, who said that he's going to deliver a conclusive report on the origins of the coronavirus, which apparently was, according to him, was manufacturing by the Chinese or whatever. There's whole sorts of conspiracy theories about it. But what does this tell you about US and China going forward?
Yeah, that's what I wanted to tell you. The fun part, Stelio, is I bet you on that. At the same time that they're going to be, fighting in essence to paint China as the bad guy here. I'm not saying they're not. At the very least, their omissions to initially communicate the significance of the problem,
yes,
definitely made a lot of damage, because if the rest of the countries knew in advance, they could have taken much faster measures, ban traveling much faster, etc., and the situation would have been a lot better. So I'm not going to go into the conspiracy theory if it was laboratory manufactured or whatever. My idea about conspiracy theories. I don't pay attention to them because, some of them are definitely right, but the vast majority of them are not. And chasing after them and trying to verify which is and which isn't really productive. But in any case, going back to what I was saying, at the same time that they're going to be doing that, they're going to be trying to persuade the market so it doesn't tank, that the US-China trade deal and phase 2 are on track.
Yeah, remember.
How exactly can you combine that? I have no clue.
Yeah. Remember, before this virus, the whole thing about equities was the US-China trade deal and how, it's going to work, it's not going to work. And it was looking positive. But, after all these things that are happening now, how can it be positive in any way? I just fail to see it. So
you know what else people forget, guys, is that we were in a manufacturing recession here in the US before the virus washed upon our shores. And the only thing that was holding up the economy was the consumer, like usual. So, we can't blame weak manufacturing on the virus because it was already there before this. And then the last prop for the economy, being consumer spending, has definitely, even though people are opening up, we'll see how many people go in, like Steve, you had that poll, how many people go to restaurants and movie theaters and things that are opening up. We'll see.
Yeah, I actually had a look at it again yesterday.
Yeah.
It was like 25%. The highest percentage was for restaurants, which was like something like 25%.
Yeah.
And then the rest of the questions were like for big type of events, for traveling, and everything else, every other question other than the restaurants, which was 25%, said yes, they will go to restaurants. Everything else was below or a lot below 20%. So, some of the answers in some of those questions were like 12%.
Yeah.
So
well,
we like movie theaters, big events,
yeah. PTSD from the virus. I've never had this experience before. No one alive. Maybe this happened during World War II, where you had to go hide in a bunker during a bombardment. But even after the bombardment, you could come out. Okay, so no one alive has experienced what people are going through now, and it's got to have a psychological impact on, I can't touch that, I can't shake my friend's hand, I have to be 9 feet away, and when I'm running, someone could cough, and I could run into that stream of their, of the virus. So I think a lot of people are psychologically already damaged from it.
Yeah,
including me.
It's actually, today is the first day that they've lifted restrictions on travel, on moving around, basically here in Greece. So you now don't need to send a message to say, I'm going to the pharmacy or to whatever. And we were discussing with friends of ours who have also been in lockdown for like 2 months now. What are we going to do? We need to see each other. Yes, great. And we're going to go to each other's houses. We're not going anywhere out. So I think we're not the exception. So I think the recovery is going to be slow and painful, unfortunately. We're not going to go back to where we were, 4 or 5 months ago. I hope
so on that basis, guys, let me ask you this. You guys handled and shut down early the coronavirus issue. If people want to travel there and take a vacation, I'm asking for me, are they going to have to go into a 2-week isolation period before they could go about the country?
If you're coming
tourists
from
come in?
if you come from another country, I think there's still a 2-week quarantine.
Stelio, yes and no. I'll explain. They know that this would be devastating for whatever tourism will be left. So what they're discussing now, and they haven't officially announced it, but I'm pretty sure it's going to be happening within a matter of maximum a couple of weeks. And we're not the only country. Is that they will develop, not they will develop, they will make available tests, COVID tests that will have like very fast results.
Yes, couple of hours.
So in essence, what's going to happen if you want to travel and do your vacation here, you will be able to take that test, and once the result is out within a few hours, then you won't have to go through. If of course it's negative, needless to say.
Right.
So if the result is negative, there will be no restrictions.
Yeah, that's a good point. Actually, that's good.
Okay.
Yeah, so you will be able to travel around without.
So it'd be a good idea for tourists to take the test before they get there.
Actually, I don't know.
So
but
they
even
know.
if they don't, they will be able to get like the test here in the airport or hotel or whatever else. And once the test is out within a few hours, then there are no restrictions. You can go wherever you want.
Yeah. Okay.
If you're negative, obviously, right?
That's what I mean. Do they put you up somewhere?
this summer,
or throw you in a tank? Huh?
I think this summer we're going to see a lot of local tourism, not only in this country, in most countries.
Everywhere, yeah.
So that's something to consider.
Are planes flying in there from the U.S.?
As far as I know, yes.
Yeah. Okay.
Yeah, you're free to come, man. Come.
Okay, bro.
Flights, of course, flights have been reduced dramatically because there is no demand. I mean, the basic reason is there's no demand, right?
Yeah.
But flights are still happening. Yes.
Okay.
So equities, I think, like I said before, are the main driver, and we had a week close on Friday, and today is continuing. Let's see how it goes. I still think we're going to have one proper leg lower before we go to new all-time highs. But let's see how that goes.
I'm totally with you, Stelio. It's exactly what you said. A risk is driving both equities and the dollar, and along with the dollar, the whole FX complex is dancing around. Yeah, absolutely.
What else? Data-wise, we had a few. It's PMI week, so there's a lot of manufacturing PMIs today. Out of European countries so far, and they are predictably in like the 30s and 40s, which is which is weak, and it's expected to continue. The question is, how quickly are we going to rebound? I said before, I think it's not going to be as quick as the market expects, but obviously we'll going to have to wait and see. And this week, the main event again is employment data out of the US. We have non-farm payrolls and unemployment claims Thursday and Friday.
I think the NFPs are expected to be, this month's NFPs are expected to be something like 21 million.
Yeah. I mean, this is,
this is unbelievable. I mean,
if you went 6 months back and somebody showed you that, what would you have assumed? I would have assumed like World War III or something.
Yeah.
But yeah, it's crazy. Thank God it's not World War III. So, that's pretty much it. Oil is also looking a little bit jittery today. The closer we get to the expiry of the June contract, the more likely is we're going to see a bit more crazy
crude oil tanking, especially if we keep on having, a period of, weakness in risk, because, we know that those go hand in hand.
Yes.
So, if close to the expiration, we're seeing stock markets are tanking, it's very likely that we're going to see some type of a repeat of what we had with the May contract, right?
Yeah, and for people who haven't read it, we put out a blog post about oil, what was it, a week or two ago?
A week ago, I think.
A week ago, yeah. So
it's free, actually.
It's free on our site. If you click on the blog link, you'll get there, scroll down a little bit, you'll see it. It's just an explanation on what happened, and it might happen again. I mean, I don't think it's impossible. I think it's less likely than last time, but we might still get, zero or close to, as delivery gets, the chances of delivering physical oil on the futures is very low due to storage constraints. So this is a number that's going to settle somewhere, and the future is either going to get rolled or it's going to get closed out before the expiry, and that means that price is somewhat irrelevant, obviously up until a point. So
yeah, actually, price can go as low as the equivalent of or close to what the contango is going to be in in switching contract, in rolling over the contract failure. So it can go negative. Yeah, absolutely, it can go negative again. But in general, forget about all the short-term pain that's there in oil. Keep in mind that looking further down the future, oil prices where they are extremely attractive. Of course, you need to have proper timing, you need to have patience, you need to choose the right instrument through which you want to play this bias, but I'm pretty sure that oil is going to be a lot higher at some point, by the end of the year.
Yeah, I agree. Have you seen US Baker Hughes oil rig counts? This is a number of rigs which are not idle, basically, which are producing, and it's gone down from something like
I'm assuming that it has cratered, right?
750 to 300 within, 5 weeks?
Yeah, so 60% down or what?
So, over 50% low, which is crazy. And these things cannot go back online at the flick of a switch. So, this market, the oil market in particular.
And my assumption is some of them are never going back.
Yeah,
as
but they're highly levered. Shale producers highly levered. Yes, we're going to see some failures there for sure. So, and it's, oil is such an interesting asset class because an instrument, because you have these automatic stabilizers in terms of production, not to mention obviously OPEC, who can step in and control production just because they want to, so it's very interesting.
Yeah. Okay, anything else, Sel, before we jump to the charts?
No,
we have several questions.
It's been quiet, and that was the data out this morning, so not much else to say.
Okay, mate, great. Okay, so now going back to the chart. Obviously, we have risk breaking down, right? I mean, I was monitoring this ascending wedge here in the S&P. We've now broken down. As long as we are below the highs, there is a very decent chance that we're headed quite a lot higher. My target still remains 2630 to 2640. I'm still short. My cost average is, just above 2900. So, I'm staying in this position. There's no question about it. Any rebound towards 2850, 2860, I'll probably add a little bit more to the position and make it a 3/4 position from half of a position that it is. So that's my plan here. No need to go through each of the indices separately. You see the Nasdaq has also finally broken down from this channel. You see the VIX, which is the inverse, having broken higher from this descending channel that we were trading in. You see the DAX, which not falsely actually, because I expected that this would create a final thrust higher. That's what we drew. And we got that. We didn't quite make it to the 61.8. We stopped a little bit lower. It doesn't really matter. We completely reversed on Friday. That was a big reversal, and we're seeing very healthy continuation today. In which case I expect that the next level of support is at 10,200. Manuchin just says that the Trump administration is ready to provide more stimulus for coronavirus relief. Just came through, through Squawk. So I'm just
more of everything.
More, yeah. Step on it. 6 trillion are not enough. So DAX also breaking down from here. What's 10,200 to 10,070? That's an interesting area of support, although I do think we're headed lower from there as well. So no need to go in detail for more indices. You just had a brief outlook of the main ones. Any rebound, as Blake said, at least in the short term, in my opinion, is a selling opportunity. Now that we've broken down. Do I think that we're headed to new lows? Not necessarily, because we're seeing they're pumping massive amounts of liquidity. So, I mean, I believe they're going to do a decent job in supporting nominally prices of stocks. Most likely it's going to work in the sense that we're not going to be headed where we should be headed, if left to rebalance itself. I mean, if leaving the economy and the stock market to actually rebalance at normal levels. But it is what it is. In any case, for the time being, though, I do believe that the path of least resistance remains lower until we find some considerable low, might be near the previous low, might be lower. That's still not out of the question, might be a little bit higher. I'll judge based on the price action for the time being. As I said, I remain short. Obviously, now going to the dollar, and here's the DXY. Obviously, you see the DXY has so far posted a bullish engulfing on the daily chart. You can clearly see it here, right? Bullish engulfing, so quite a bullish reversal here. Backtesting, if we assume this was a triangle, backtesting this. So let's see what happens from here. Needless to say, if my assumption that risk off is gonna last. Sorry for stopping. I'm hearing new statements from Mnuchin. He expects China to make good of their trading agreement. So it's what we were saying before, Celia. I don't know if you're still here, but Mnuchin is on one hand, they want to, they want to attack China. On the other hand, if they expect them to do good. Now, how both of those are going to work, I have no idea, but, whatever. Needless to say, by the way, usual misconception, I want to mention it once again. It was mentioned, I heard from the administration, they were saying that, they actually dismissed the rumors that they might, there were rumors going around that they might, in essence, not pay Chinese some of the bonds that they were holding as compensation. I don't know if they ever could seriously consider that. That would have been destructive, because once you, in essence, default on even a specific number of bonds, then any faith the market had goes away immediately. But on the other hand, they said that we can still increase tariffs. We can even make them pay like for up to $1 trillion of tariffs. Let me repeat this again. You cannot make foreign citizens pay any type of taxes. Tariffs are being paid. If you put tariffs in the US, tariffs are being paid by the US consumer. It's as simple as that. It's not complicated. It's extremely simple to realize. Directly or indirectly, that amount is going to be paid by the American consumer. Directly, even by imposing tariffs, still the best option is to buy the Chinese product with the price increase due to tariffs, or indirectly, if by imposing tariffs on the product, you make some kind of a substitute being now more attractive, in which case the consumer is going to pay the difference of what the Chinese product costed before the tariffs and what the product that you're going to buy instead of it costs afterwards. So, tariffs are being paid by US consumers. End of story. I mean, it's as simple as that. And something tells me that, especially during a recession, that's not a very good idea, because people are going to be anyhow, under pressure. Definitely their income is going to be diminishing. So, that's probably not a very good idea. Now, so dollar, quite a nice reversal from there. So guess what? Another rejection in the case of Euro USD from this 110 level. So in essence, the Euro USD still remains trapped within this range. No surprise here. I've said multiple times, why waste your capital trying to trade something like the Euro USD or the USD Yen that in essence are doing nothing? Find something more attractive to trade. And luckily, during the past couple of months, there are several instruments that are moving, quite nicely and, provide nice opportunities for you to trade. Okay, so in my opinion, don't just, get fixated in trading a couple of instruments because you've gotten used to trading them. Just trade what makes more sense, what has a higher chance of giving you a nice direction, and go for it. I've considered myself a Forex trader for more than 10 years. Needless to say that during the past roughly 1 year, I've made most of my trades in things outside of FX. I mean, I'm okay with that, right? I'm okay with that because I've done good, and I've done good because I've stayed away from things that would have probably hurt me if I tried to trade them. And, during the past year, most FX pairs have had big periods of time that they're not doing much, okay? Now, Aussie and Kiwi have questions about them, but even if we didn't, I would cover them. There is the ascending channel in the Aussie. We seem to be breaking below it. That's going to be a bearish development. Now, are we headed to new lows? No idea. Exactly the same way I have no idea what's happening with the S&P, meaning I know it's headed lower now. I don't know if it's going to go to new lows. Okay. The type of price action we get is going to tell us what's going to happen. But for the time being, I'm bearish all of those pairs. I'm bearish the Aussie, I'm bearish the Kiwi, I'm bearish the indices, and I'm waiting to see how the price action is going to unfold to know if I should be buying them, after a few days, or if I should be looking for more weakness. Now, here's the Aussie breaking down. Here's the Kiwi testing these wedges, trend line support. You can see it clearly here. I mean, this formation so far, has a huge chance of being a bearish formation. You can see it. I mean, it's so far it looks textbook. Now, Aussie yen, even a more textbook risk correlated pair, closed on Friday below this ascending wedge. Even if you want to focus on the candlesticks, posted an evening star formation. You can see these 3 candlesticks there. So, any type of perspective after filling in the gap, just look at the combination of elements you have there. I know that Blake shorted this, and that was an amazing trade. So look at the combination of factors you had there. Let me choose.
Nice look.
So we filled in the gap. You see it there, right? Done. Check. We tested the 61.8. Check. We posted an evening star formation. Check. We closed below this ascending wedge. Check. I mean, right? If the
jury find Aussie yen guilty of failing.
Yeah, I mean,
good case.
Is it a 100% chance that it's trending lower? No. Why? Because there's nothing that's 100% chance. Is it a high probability trade that this is failing and trending lower? Yes, it is a very high probability trade, right? And that's all you can do in trading. What you can do in trading is take a lot of high probability trades, knowing that if all the trades you take are high probability, at the end of the day, you're going to be making money in more than you're losing money. So the only element then left is make sure you exert the right risk reward for each one of them. And if each of the trades you execute have a proper risk reward ratio, and each of the trades you execute is a high probability trade, then you're going to be doing fine. If you're jumping on trades without making plans in advance, if you're jumping on trades because you're bored, if you're jumping on trades because, they look okay and you don't have strong evidence, you're probably not going to be doing good. So it's a game of patience, and the game of playing, statistics in essence, right? And the odds. So make them, be in your favor, as simple as that. I mean, I know it isn't simple in action, but, in theory, it's simple. And if you use a trading journal, as I've said many times, you're going to see that it's going to become a lot simpler to follow some basic rules, because once you get to write things down, it's much easier for you to control yourself, and because you're forced to judge your own ideas. Okay. Now, we have questions about the metals. Gold. What do you see here in gold? Because what I see is a triangle, and the triangle in an uptrend tells me that there's another move coming to the upside, most likely than not. As I said, nothing is 100%, but there are specific patterns and specific circumstances that produce high quality indications, and this is one of them. So I would assume that this is another period of consolidation that has a much higher chance in getting resolved to the upside than anything else. So next upside target 1771, above that 1821, as simple as that. And you can be long against 1660, and I think that's a decent trade. Okay. Silver. What do you see? The exact same type of pattern. What would I assume would happen here? I assume another break to the upside to at least test the 61.8% fib and horizontal resistance area roughly at 16. So that's what I assume is going to happen here. Palladium. What do I see here? I see that it's still under pressure. I still hold this short position. I think that if risk keeps on doing poorly, like we saw during the past 1.5 trading days, it's going to remain under pressure. Platinum, what do I see here? I see that it's still consolidating. It might move a little bit more to the upside. Having said that, in general, doesn't look that strong, does it? So I would assume more pain might come in the not so distant future. Copper, what do you see here? I still see a corrective rebound, right? So I would be very, very careful in trying to be long this. I mean, the structure so far looks corrective to me. We know that copper, most often than not, is paying attention to the health of the global economy. How do you journal your trades? From the Ostenis. And your last name is definitely not Greek. The Ostenis, a very interesting ancient Greek name, though. Brazilians, I know, like to use some ancient Greek names. Would be interested to know where you're from. How do you journal your trades? You can create a trading journal yourself using an Excel file, or you can use, there are some trading journals you can subscribe to. We are actually creating one in ForexAnalytix ourselves, because we do believe it's extremely valuable as a tool. You're from Colombia. Okay, interesting. The Ostenis. Okay, interesting. Copper chart. Oh, we just covered copper and I hadn't even had a look at it. Do you think China would eat some of those tariff costs to keep an edge on price? Stores do that all the time. They might, although after the initial set of tariffs that we've already seen, I don't know how much space there is for that, Eric. But in any case, even if we assume that they still have the capacity to eat, in quotes, some of it, at least a decent part of it is going to go back to the US consumer. There is no escaping that. Okay. A question about natural gas. Listen, I've said it before. There is a clear divergence between what oil does and natural gas is doing here. Natural gas has not breached through the 2 to 205 resistance area. As long as it doesn't, might see another leg to the downside. But keep in mind that if we break through 205, I think natural gas might actually explode higher. And I like the fact that it's still diverging to crude oil. Anyhow, so bottom line, don't buy it here because it's very close to resistance, but above 205, I think it has the potential of squeezing shorts. I've been creating and adapting my trading journals for a few years now. Recently changed it again to test it for my second quarter of the year, says Tyann. Okay, that's very interesting. And you know something? That is a very nice thing to do. Get involved with building your own trading journal, worst case scenario. Yes, absolutely. In general, from my experience, getting involved in that process seems like initially might seem to you, if you haven't done it, like a waste of time. But believe me, it is so productive and so helpful for your trading future. It's like the best and cheapest investment you can make. Spending some of your time to build your own trading journal, because in essence, it will get you to very well understand and realize the concept of risk management and the concept of how beneficial it is for your profitability to seriously plan your trades in advance. Once you see it working in action, you won't be able to go back. I mean, you won't be able to understand why for so long you were trading without that, right? It's as simple as that.
Yeah, it's like looking in the mirror.
Yeah, exactly.
You get to see what you're doing,
Yeah.
so.
Yeah, exactly. That's a great analogy, Dale.
So we have Jake with TrendSpider here today.
Perfect. Let me see if there is any question I can cover like super fast within half a minute. I think I covered all the majors. Perfect. So, perfect timing.
Okay.
Okay. So, as I said, later today, you're going to have all the recordings for the event available. We're going to send out an email to everybody that registered, so don't worry about it. Just a few hours left. Actually, the recordings are ready. They're already uploaded. We have a little bit of issues of caching with the site. We're resolving at the moment, and then you will be able to view them. So thank you, Dale. Enjoy the interview.
Thank you, Steve. Welcome back, Jake. How are you, buddy?
Hey, I'm doing well. How are you?
The world has changed since the last time you and I talked, huh?
Yeah, I can't go get myself some chicken wings at a local restaurant like I used to be able to, like last time we talked. So yeah,
yeah, you could go to a drive-through.
Yeah. It's
are you doing that or me? Huh?
I said it's crazy out there, and it's been it's almost been like a dream. Sometimes I wake up in the mornings, I'm just like, is this really happening? So it's been interesting. So.
It's surreal, and some of the market moves have also been unprecedented. You want to grab the screen here, Jake? Steve, stop sharing, please. And
there we go.
Okay, so you just go to that little green box so we could see the teardrops. Teardrops, one appropriate technical indicator when there are a lot of tears out there, not just in financial terms, but what's happening to people. I mean, I've been touched. My older sister is in the hospital with COVID right now. Wow. So let me ask you, Jake, I guess the big question is, I don't know what you want to talk about, but now I could tell you're looking at this megaphone formation. So here's the big debate. Was that the low, or B, we're going to get a retest, or C, we're going to make new lows? What camp do you come down on in here? And what's your chart telling you here? A failing rally?
I definitely could tell you that I've in the past have been on all three sides and have made the trade on all three sides. For me personally, just from experience, I am like everybody else out there. I have no idea what's going to happen. Honestly, I don't even know what's going to happen next week with all of this. And so, obviously the market's always unpredictable, but this whole nother leg of just uncertainty really makes it hard. So for me, I've been in the position where we've had a big drop, and I was 100% convinced that we were just going to start the next depression. And one thing that I always remember from that was, so many people told me, don't fight the Fed, and I'm like, whatever, you don't know what you're talking about. I'm 22 years old and I know everything. And, that didn't work out too well. So, for me right now, I think I got to go with my experience. I think from the
Always.
chart for what we're seeing, one thing that we know for sure right now, what I have here is maybe we'll touch on raindrops a little bit, but I want to go over this anchored volume profile, because this is incredibly powerful and it gives you a perspective that is really hard to do elsewhere. And the unique thing about this on TrendSpider, the volume by price or volume profile, whatever you want to call it, is not anything that's new or improved.
Is it really compared to like market profiles that people use?
It's essentially a market profile, except you have the ability to say, I want to know what the market profile is since the March 23rd bottom. I want to know the market profile since the February high. And you'll see as I move this line, it anchors that point and starts the market profile from a different point. So
you can't do that if you just use market profiles, because I know a lot of people use it. They don't have that capability.
Generally, it's a function of the history. So generally, like if I had the market profile up, we would start the market profile from the last candle here. But we want to start a market profile from when there was a status quo change in the market. This was a very big change in the market. You've got this huge peak here. This was when these buyers maybe started to become sellers. This is when you become a different participant in the market. So we have to start the point in time where that status quo changed. But what's interesting here is obviously we can see that we are at what I call the break-even zone. And the break-even zone is essentially just your point of control. But I call it the break-even zone to understand what that actually means. At the break-even zone, if the price is at the break-even zone, the majority of shares that are holding within this distribution are break-even. So you're pretty much at your equilibrium at this point. So a lot of the time, if the price is above this area, you're going to call this like a demand zone, because this is where previous demand was. Now, let's say that, we've got a different example like Tesla, and you've got something a little different where, this area, if we anchor it from here, this area initially acted as our supply zone because, there's a big block of shares holding here, but this, particular set of volume is including these recent candles. So before these candles were here, we still had this block of volume just holding here. And this was what we would call the supply zone, because these were all the people that bought too early, and they're the ones that are now breaking even at this area above. And so they may come in and add supply on the market when they break even. So the point of this is to be able to see where those supply and demand zones are. From an SPY perspective, you can see that we're pretty much right at that break-even zone. So for me, this next, let's say, 3 to 5 days, especially with some big earnings this week, I think is really going to tell us what's going on. Now, one thing
underneath the break-even zone tells you something.
Well, we've got a big volume gap here, so it tells us that we don't have a lot of participants in the market here. So what a lot of the time happens is you've got like a friction zone that will fill very quickly. Because there's just not a lot of participants there. So a lot of the time,
it's like a vacuum.
Exactly, it's like an air pocket. So and this is the same thing as Tesla. We had this green zone here. It wasn't as defined because we didn't have all this price action yet to build up this volume. But this block of volume was here when we were down here, and this volume gap was here as well. And you'll see, look at how quickly the price moved through that volume gap. It only took 2 days for the price to move from 260 to 278 because there wasn't a lot of supply until we got to this area. those people who just dealt with a 20% drawdown are now break even, and they're like, yeah, maybe not. Maybe I want to get out of this. And so that changes the supply and demand, just overall general kind of circumstances. And then you've got your let's say 2 weeks of kind of just nothing, just the market trying to figure out if this is a demand or supply zone.
Great look.
So, this is important for a lot of reasons. Let's say that I'm going to turn this off. And then what's really cool about this is we can actually go in and say, I know what the volume profile is of this megaphone channel, because all we have to do is turn on the volume by price. And if we start it from the start of this megaphone channel, let's just say it starts here. It doesn't really matter if we start it here or here. You're going to see that. Look where all of the supply is. We just rocketed into this massive supply zone. So it's going to be hard for the price to really break this barrier, if you will. And notice that we've got the monthly SMA 20 on here as well, acting as resistance. So it's not just supply above. You've also got confluence of indicators that people are looking at. People look at the monthly SMA. People look at these indicators that essentially become self-fulfilling. And so naturally, after a 30% plus move up in the markets in less than 6 weeks, you're going to finally hit that exhaustion zone where it's kind of like that air pocket or volume gap or just kind of zone, this vacuum. When we were down here, we had all of this volume above. So what happened is everybody who bought too early is essentially just holding, and that creates this kind of like magnet back up to this area because all of those
What created the turn? Was there anything that you saw besides the megaphone line down there that told you that could be a bottom?
So if we go to the monthly chart and we do the same thing with the volume by price, but we anchor it from the 2009 low, you'll see what happens here.
Well,
we bounced right above this massive shelf of volume.
Yeah.
So, you're not always going to get this
helpful.
perfect. So this allowed you to see, whoa.
So when we were crashing, did you go out to your monthlies, Jake, to look for things like this?
Yeah, 100%. Because all the daily levels were breaking down.
Yeah. Okay. And on the previous chart, you were showing where people wanted to get out on this rally. So people were buying the dip real early, and the market continued to accelerate from where they were coming in and getting long. I don't think it's that chart. Oh yeah, it's to the one on the right where you show all the supply. But does that imply people were buying the dips before we made a low? And that's why we have all this overhead supply, because they were early?
Yep, exactly. So the thing that I really wish we had on the platform was the ability to go back in time and be able to show like what the volume profile looked on March 23rd, which I'm sure it will come at some time. But that was something that was absolutely fascinating about this was you had all of this supply above. A lot of people would say, yeah, there's a lot of volume here because you just had a ton of consolidation. No, this volume was here before that. So yes, this block right here was all of those people saying, oh, I am a genius. I just bought the market when it's 20% down in 2.5 weeks.
Right.
And then all of a sudden we get a continued drawdown, and all of a sudden they're down 20% in 2 weeks. Right. So as the price gets back up, we turn this gain or this loss to a gain. All of a sudden from the lows, they're up 30% in less than a 2-month period. And they're like, all right, maybe I'm going to get out of this. I just got furloughed. I just did that. I just did this. I'm out. And so that adds to the supply as we get back here. So, that's exactly what it is. It's all those people who thought they were, the next Warren Buffett buying the dip, and then we get another 20% drop. Those are the people that are now our holders above that are going to act as that resistance zone.
Okay. Any other instruments you were planning on talking about?
Well, you mentioned the raindrops, so we might as well jump in them. I want to mention the raindrops because I think this is something that was really cool last week. A lot of people got bearish last week a little early, which, you know, I always generally enter a trade early, so I can't say anything about that. But just from a bear perspective, you know, we had something that was really interesting last week when you look at essentially the hollow candle versus the raindrop. And before I go into that, we obviously got to go over what the raindrop is. The raindrop is a volume-based candle. So instead of an open and a close, what you have here is you've got the left-hand side here, or sorry, yeah, the left candle here, bar, which is the volume-weighted average price for the first half of the period. So we're on the daily chart, so that is going to mean that this is the first half of the day. And so typically a regular bar chart, this is your open. And then on the right-hand side, this is your close. Well, in this case, instead of the close, this is your volume-weighted average price for the second half of the period. So what's really interesting about this is you can actually see how the volume is flowing throughout the range of the day or the 30-minute candle or whatever you're looking at. So what you can do is using this, you know, we have the first layer, which is the left-hand VWAP and the right-hand VWAP, first and second. But then we have the volume profile overlaid on top. So you can see where that volume was flowing. So if we draw a line, this horizontal line, and we do a previous high here from April 17th, you'll see something really interesting. On the regular candle, we did not close through it. We actually just wicked above it. So, you know, you're like, all right, well, we did intraday move through it, but we did not actually close through it. Is this bullish or bearish? What the raindrop does is, and it's not going to tell you if it's bullish or bearish, but it's going to tell you, were there participants at the top of this range? Sure, there was a wick here. Was that one transaction that just pushed the price up for, you know, a second or two? Or was there
According
actually
to the raindrops, yes.
Yep, exactly. Look
Okay,
at how
so
much
the raindrops told you, so here I am, a novice, learning about your stuff. The raindrop, unlike the candle without the teardrop, I'm kidding, raindrop, it said, was telling you, the message was, even though he had a wick, the raindrop closed strong, in indicating that the wick was kind of meaningless and you should look for more strength. Am I reading it correctly?
Exactly. And the thing is, a lot of people will say, you know, how do you know that volume wasn't sellers? Well, of course it was sellers. Someone's got to buy it from someone. So we know these were sellers, but more importantly, we know that those buyers stepped in and accumulated those shares above the resistance line. If these buyers were not strong, you would have not seen that accumulating up here. You would have seen the price would have had to drop for them to come in and actually buy that up. So the fact that the buyers stepped in during that selling is what we're more focused on. And so then you have your two-day move up.
Nice, Jake. Well, if you have no other instruments you want to cover, it'd be a good time to tell people how they could look into your software and integrate that into their trading if they have an interest. You want to do that?
Yeah, absolutely. So we have a ton of different platforms we're on, but Twitter is definitely the main one. So if you want to follow us and learn more about these things before you jump in, you can follow us on Twitter and just you know, see how we implement these in everyday trading. And then you can go to TrendSpider.com. Yep, at TrendSpider. And then you can go to TrendSpider.com. Yep. And do we have our, and so if you went down to the bottom on our TrendSpider.com just main page, you'd be able to go to any of these social media handles as well. So you can check out everything on the website. We have our pricing page here just under pricing. You can check out all of the different products overview. One thing that I want to mention, you know, a lot of people may look at this and say, this is a really intense tool. There's too much going on. We know. We also have created pretty much a university and a weekly podcast going over the platform, so you're able to get familiar with how we're using it, how others are using it, And so it's something that, you know, it's not like, hey, here's TrendSpider, good luck. We're there every step of the way to help you out and make sure that you really understand the power of this thing.
Any fraternity houses, sorority houses at the university?
Nope, not yet. Just keg
Because, you know, that would convert your podcast into a podcast.
Yeah, it would. Too bad. Yeah, honestly, who knows? We may have to be virtual.
I knew I'd trip you up with that one, Jake. Anyway, Jake, you know, I hope you and your, you know, all the people you're in business with and your family remain untouched by this. And, you know, let me coach you. Be patient with yourself. No one alive has ever traded through a pandemic before. And appreciate you coming here. I'm a fan. I root for you guys. And thank you, my trading water brother, for coming in today and giving us a couple of nice looks in the spiders.
Thank you so much for having me. And I wish the same for you. And I wish a speedy recovery for your sister and hope she's well. And everyone else out there, stay healthy and safe.
Okay, man. Thank you for coming in today, buddy.
Hey, you're welcome.
Appreciate it.
Have a great one and have a great week.
Okay, everyone. We'll see you tomorrow for Turnaround Tuesday. Don't just count your raindrops. Don't just count your pips. Don't just count your crooks. Count your blessings. We'll see everyone tomorrow. Adios.